Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Friday the 15th of June 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Alright, let's take a look at overnight changes and price moves to be aware of. And we'll just flag a couple of movers first of all. New Zealand dollar giving up 0.3% against its US counterpart and trading back below that key 70 level, probably of more psychological importance than anything else. Nonetheless, 69.55 trading in the New Zealand dollar against the dollar shortly before we recorded the video. Losses also for the Canadian dollar and the Mexican peso against the greenback, down by just over or around 0.2%, the pair I should say. But the biggest move on the day, and one that we should pay close attention to, is that of the Brazilian real, which has given up 2.33% against the US currency. Of course, we've flagged Brazil as a potential worry point in recent days, and we'll look at some of the reasons behind that move yesterday and overnight a bit later on in the video. Dollar index for its part reasserting itself, I suppose it's fair to say. 94.94 trading, not that much of a change overnight, just up by 0.18%, but I suppose the key point is it's well through that. Well, I mean, it's almost up at 95 again, isn't it? So it's moved almost two big figures over recent days. Right then, let's take a look at what's on the calendar, events that may move the markets today. A relatively light calendar. We've already had a speech from the Reserve Bank of Australia Assistant Governor Ellis. We've had the Bank of Japan's interest rate decision and press conference, and again we'll look at that in a bit more detail momentarily. To come this morning then at 9 AM GMT, we will have labour costs for Q1 out of the Eurozone, and that'll be accompanied by CPI data for the month of May from the Eurozone as well. So a key look at inflation, although after yesterday's ECB news you could be forgiven for thinking that perhaps inflation doesn't matter anymore. At 9:45 ECB board member Kerr will give us a speech, and then we jump forward to 13:15 and cross over the Atlantic, I should say, for US industrial production data for May and capacity utilization out of the US economy for the same month. And that's followed at 1400 by the Michigan Consumer Sentiment Index for June. And if you're still in the markets around 5 o'clock tonight, you can see the US Baker Hughes oil rig count. Breaking news and comment then that's caught my eye. First of all then, the ECB announces it will end its QE program by the end of 2018, removing a key source of global liquidity and funding. Meanwhile, the Bank of Japan takes no action on interest rates or quantitative easing at its monetary policy meeting, but the committee have lowered their inflation assessment further, suggesting that whatever the Bank of Japan is doing isn't really working the way it should. Meanwhile, China's new home prices have remained unchanged in May as regional gains offset falls in both Shanghai and Beijing. One of the areas posting gains was the border area with North Korea. How ironic that the border area around two communist countries should see house price gains. Meanwhile, the US could announce further tariffs on up to 900 types of Chinese imported goods today, in what could be a further ratcheting up of trade tensions. Now then, food for thought, something to take away with you into the trading day and beyond. Why not think about this? As we already noted, ECB QE is to end in the next 6 months, and 30 billion euros of monthly liquidity and asset purchases is being withdrawn. Central bank QE has been a vital, if indirect, source of fund flows into emerging markets, and the Eurozone has been a significant contributor to those flows, say research house ex-ante data. The question is then, how will emerging markets fare without those regular flow of funds? The chart here shows the source of and volume of fund flows into emerging markets. The grey line is that represents Eurozone flows, and you can see that it's already started to dip away. I think the answer to the question there is not very well. Certain economies will fare better than others, but Brazil is obviously a target, and perhaps we should keep an eye on South Africa too. Right, risk warning time. Please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of the products for you, then please do contact your Pepperstone account representative.